What if I told you there's an oil mafia richer than Musk, Bezos, and Zuckerberg combined? But 57% of their global gas production doesn't have independently audited reports. These NOCs control trillions in assets, operate in the shadows. And their wealth makes even Elon Musk look like a pauper. So who are these mysterious giants? These giants are national oil companies, or NOCs. Think of them as government-owned oil and gas businesses. They're not just small players, they're economic heavyweights. They control at least $3 trillion in assets and are responsible for most of the world's oil and gas production, from Saudi Arabia to Mexico. These companies dominate the energy landscape, but their enormous power comes with a problem: a lack of transparency. Unlike regular companies that have strict rules about showing their finances, many NOCs operate in the shadows. It's hard to know where their money is coming from and where it's going. Imagine running a lemonade stand and not telling anyone how much money you make or spend. This lack of transparency creates huge economic risks. Many countries rely heavily on these companies for their government revenue. When NOCs aren't clear about their finances, it can lead to huge debts and even force governments to use taxpayer money to bail them out. Some have debts exceeding 20% of their country's entire GDP. Think of it as a situation where the government has to borrow money to help an already rich company pay its bills. Excessive borrowing adds to economic instability. With debts often hidden from public accounts, many national oil companies use the market to borrow money and invest in further exploration and expenditure. The banks offer these borrowing as these companies have huge ethical revenue and potential market dominance. These NOCs are not all the same. Some are focused on making a profit, while others act like cash cows, simply collecting revenue. Some even provide social services and subsidies to their citizens. This makes it even harder to understand their true objectives. It is not ethical for NOCs to be profiting while holding subsidies, but is generally a common practice. Now let's talk about the future. The world is transitioning away from fossil fuels, and this poses both a challenge and an opportunity for NOCs. Many are starting to invest in renewable energy sources, like solar and wind, but here's the catch. These companies still make most of their money from oil and gas. It's like a bakery that also sells salads. They're good at making bread, but can they really make a great salad? The risk is that as the demand for oil and gas decreases, these countries could end up with stranded assets, oil reserves that are no longer worth anything, also increasing risks on current explorations. This makes diversification, or spreading out economic interests, incredibly urgent. To avoid this, serious reform is needed. NOCs need a sustainable vision for the future, clear rules about borrowing and spending, and most importantly, transparency. Citizens and governments need better reporting from these companies. The International Monetary Fund, IMF, should play a more active role in auditing these companies to ensure ethical investing. It's like having a financial checkup to make sure everything is running smoothly. This also includes assessing and reporting the standards when reporting climate change metrics for ESG ratings. This shift to transition creates an urgency for new policies to come in place that would protect economic balance. The goal is to increase efficiency and decrease expenditure for oil companies for a more stable future. Or more government funding will have to be used in case of any potential financial losses and large-scale defaults. A large-scale loss will be an economic disaster, especially due to large-scale and excessive debts the oil industry has accumulated over time. To put things into perspective, let's look at some real-world numbers. In 2023, Shell reported a total revenue of $316.62 billion. BP's revenue reached $248.891 billion in 2022. ExxonMobil delivered industry-leading earnings of $36 billion in 2023. And cash flow from operating activities of $55.4 billion. Showing the enormous financial scale of these oil giants and potential market dominance for now. Looking back at the oil mafia, the numbers are massive, but the profits still don't flow to everyone. A relatively small group of super-rich individuals benefit. These include tycoons from Indonesia's palm oil industry, an industry that mirrors the wealth concentration seen in oil and gas. Think of Beauty and Michael Hartono, Susilo Jojo, and Anthony Salim. A few people controlling so much wealth while so many others struggle makes modern Indonesia and many NOC-dependent countries one of the most unequal societies. An extreme example of oligarchic power. It gets darker. Transnational crime and terrorism get mixed in as well. Illegal activities such as money laundering through the black market, violations of sanctions, and fraud are some of the results. Even now, much is still not known about the illicit revenue from oil that gets used to fund terrorism, such as the money that is used to facilitate war between various countries and the support for IRGC. This can cause economical instability and even deficits in economies if the money is being managed by unethical people. One final element adding to this complicated web: the influence of environmental regulations on corporate tax avoidance, carbon emissions trading, and policies that incentivize the market affect how companies manage their revenue. Governments need to work together to create regulations to increase corporate transparency, reduce tax avoidance, and have effective policies in place. While environmental regulations and the ESG reporting of these companies are important, so is the honest review of their environmental risks in the area they operate in, with increasing ESG consideration and increasing scrutiny over ESG metrics. The right governance structure is also seen as key to ensuring ethical assessment and transparency, with the ESG reports being requested by investors and governments. Ultimately, this situation raises a huge question: can these oil giants truly transition to a sustainable future? Or will they continue to prioritize short-term profits over long-term economic and environmental well-being? Now, there are still a few angles we couldn't get to in this video. For example, what is the specific impact of all this on smaller economies that rely heavily on oil? Also, what are some of the most innovative solutions being proposed to increase transparency in these NOCs? If you have any thoughts or insights, please share them in the comments below. If you found this video informative, be sure to like, share, and subscribe for more deep dives into the world of finance and power. Thanks for watching.